After working with people for over 20 years, helping them buy homes and sell homes, I see a lot of people make a lot of mistakes when it comes to the process of getting a mortgage when they're buying a home. These are the top 9 things, and they apply to refinancing or even home equity lines of credit as well, but top 9 mistakes that cost people thousands of dollars or a lot of heartache, or what's worse, could lose them the home itself. My name is Mike Perna, local real estate agent here in Metro Detroit. I've been working with people buy homes and sell homes for over 20 years. If we can help you, give me a call. Now let's get into the 9. I'm going to start with the most important thing I believe in the process, and that is shop around for a loan. I start with this because it's almost counterintuitive. I see a lot of people and hear a lot of people say, I'm going with my bank I've done business with for years, or I have a lender that seems to have a great rate and the fees are competitive. Why do I need to shop it around if I'm happy with them? First, to confirm it, take out the what if that tends to creep up in the back of the mind. What I often see is people come back to me and say, wow, I shopped it and found a better rate by a quarter point or $1,000 lower closing cost loan. A lot of people connect with a lender like a rocket mortgage through ads, or they see them pop up online, and all of those costly ads have to be paid for by someone. That's you. Also with those guys, I see a lot of times that those fees change or the rates change and you're way too far down the process that you can do anything about it. Basic bait and switch. Call your local neighborhood lender as well. The guy or gal that's got to rely on reputation only. It's sink or swim for them based on your experience, just like it is for me. When shopping for loans, I would definitely get your local bank or credit union and a local mortgage broker in addition to any other ones. Second mistake I see buyers make you should do is shop around for a loan. Yep, I'm going there twice, but this time for a different reason. There are a lot of special circumstance loans out there, and the big box lenders that advertise with sports teams don't often do these loans. Individually, they're not a big market, so they go after the bread and butter conventional loans, FHA, and the generic VA loans. In the last month, we took clients to a lender for an RD loan. That's a big thing here in Southeast Michigan. It got them a lower interest rate, lower closing costs, lower PMI, and it's a no down payment loan. We took one away from a big bank and gave them a doctor loan. There are special lower down payment and lower interest rate loans for doctors. We moved a buyer from Chase who needed a new construction loan. They got a better interest rate by a full point with the same closing cost at a different bank. There are a lot of special niche loans out there that saves people thousands of dollars in interest rates and closing costs that are not regularly advertised because they don't fit everyone. Third, and this one is more of a myth, shopping around for a home loan will not actually hurt your credit score if you follow the rules, and they're pretty simple. Your credit bureaus expect you to shop for a mortgage, but not endlessly with like 20 lenders. From the first loan app that pulls your credit, you've got 45 days to shop 3 or 4 additional lenders without it actually affecting your credit. The reason is the majority of people do this, and it's normal. It's not like shopping around for a credit card where if you have 4 different credit card companies pull it, the credit bureaus think you've been denied 3 times, or a car loan, where 2 is typical because most dealers have 2 financing options. They know people start to shop and finish shopping for a mortgage in about 45 days, so they don't ding you. Take advantage of that if you're getting multiple quotes from multiple lenders. Fourth, things can change in lending fast. I mean twice a day fast. When you're shopping 2, 3, 4 lenders, I advise having them give you a pre-approval or at least a written quote on the same day for closing costs and interest rates. And this is because interest rates change daily. I had a client last year that went to a second lender 3 weeks after getting quoted by the first because they had lower rates. And in fact, that was false. Rates in the whole market had gone down almost half a point, and the first lender still had a more competitive rate and closing costs. When a rate moves for one, it moves for all, but not always the same amount. It's different bank by bank. And shame on that lender for not following up with his clients when rates were moving around so much. If I hadn't asked what the new rate was of the new lender, which is not a typical real estate agent question, I wouldn't have pigeonholed it and gotten the buyer a lower rate. I keep an eye on rates too. Most agents do not. You're welcome, Mr. Lender. The next mistake I see buyers or people refinancing make, take the time to understand fees and make your lender walk you through them. When you get a pre-approval, you should be provided with a written loan estimate. If not, that's a red flag in and of itself. In box A on the loan estimate, there are the fees that lenders charge to do that loan. Some lenders charge loan origination fees. Some charge processing fees or credit report fees or even overnight fees. And of course, there's the appraisal fee. Some of these could be junk fees that the lenders charge and can be negotiated in some cases. So when you get your 3 quotes, compare both the interest rates and the dollar amount in the fees box. Further, some lenders add in buying down interest rates up front, so it looks like a lower interest rate than other lenders, and that interest rate might seem really good, but you're paying for it up front in the fees, so it's not necessarily apples to apples. Have the lender explain exactly what you're being charged for so you know exactly what you're getting. And I put this out there for anyone and everyone. I am happy to look over those estimates with you wherever you are in the United States. My goal is always to protect people. Next up, I see a lot of home buyers using APR, not interest rate, as a point of comparison. And those are 2 different things entirely. I hear people say, do you have a lender that can match this APR? When you should be worried about the interest rate more than anything else. The APR is associated with the fees you're paying to get get that loan as if it was amortized over the life of the loan term, in most cases 30 years. HUD requires lenders to disclose this. There's usually a big bold number on the sheet, while the actual interest rate is very small. I don't know why they continue to require this, or at least require it in this format at least, because it doesn't make it any easier on the buyer to see apples to apples. Honestly, it's useless information because most people don't keep a loan for 30 years, and the average right now is 6. You need to focus on your interest rate, you need to focus on your monthly payment, and you need to focus on your closing costs, aka fees, and you need to focus on the number of dollars you need to bring to the closing. That's it. Next up mistake I see, buyers put too much focus on the lowest interest rate and put blinders onto everything else. And I'm talking about the fees. Often lenders are charging higher fees to give you a lower rate. And although it's typed into the loan estimate on box A, most buyers look straight for the rate and skip looking at the fees. In addition to that, different loan types can have higher or lower ongoing costs of the loan, namely PMI, that can affect the monthly payment. FHA loans just reduced their PMI charge by 30 points. That's lowering the yearly cost of the average FHA loan by $800 per year. And a lot of lenders that hire 500 one-year-old kids to run loans for them are not experts in mortgages. They're not advisors. They're experts in pulling and pushing numbers to get you signed on the bottom line based on what you indicate is important to you versus what they may know should be important to you. As an expert, as an advisor, that person will challenge you when there's a better product or a better route to get the lowest payment and lowest fees. Next up, expert loan officers can get you the home, or they can lose you a home in a multiple offer situation. When I'm the listing agent on a property and there are 2 identical or nearly identical offers, one of them a buyer called an ad off the radio into a call center with a ton of inexperienced loan officers, I'm using that term loosely here, the other loan is being done by a veteran loan officer I've closed dozens of deals with smoothly over the last however many years, I will advise my clients to take or counter to equal the other offer. Why? The call center guys have a very high fall apart rate on mortgages. I mean 30 to 40% high. Like 4 in 10 pre-approvals don't make it to a closing high. And this is because these guys are not versed in all aspects of a loan, and they know that they send out 50 pre-approvals each month. They'll get 15 or 20 that don't close. They'll still make their quota of 30 that will. And often, because these guys have to run numbers so hard, they have to run so many mortgages at a time, they're very hard to get a hold of. As the person representing the seller in this case, my job of course is to do the best I can for the price and terms for my seller, but also actually get to a closing table and provide them with a good experience while doing it. The agent you choose and the reputation matters, but the reputation and experience and proactive communication of your lender matters just as much. Now, if I'm working for you as a buyer's agent, I want to be able to advocate for you being a strong buyer and also having a loan officer that's going to get us and the other client for that matter to the closing table smoothly. I want to be able to stack a solid, respected name into your loan officer queue. I can oftentimes get you a better deal, or at the least not lose the house if you've got a strong, solid name behind you. Last up, don't get pre-qualified, get pre-approved. Now, whether you're calling your bank, a local credit union, or a big box lender, get fully pre-approved. Often what I see people do is they call a call center style lender, and they get an inexperienced loan rep that is usually just taking orders, if you will, not asking the right questions to be sure you get the right information, let alone the right loan, and tells them their rough credit score from an app like a Credit Karma, which by the way is not the same score used to apply for a home loan. Told them the numbers on the tax return, and what happens is the inexperienced loan officer will issue a best case scenario loan pre-qualification with best case interest rates and best case closing costs. Then the buyers shop with that false payment and false closing costs, making offers and during the underwriting process, but then something comes up that makes a person not qualify for that great rate loan, but this other loan over here that doesn't have such a great rate. The result is either you end up with a higher payment, you've got to spend more out of pocket to buy the rate back down, or worst case scenario, you can't get the loan with the new higher payment and lose the home. An experienced seasoned loan officer is going to put you through the full underwriting process, because often with enough time, there is something that can be changed in your credit score that takes 30 days or 45 days, or additional information from your employer, or any kind of changes that can be done upfront so that you're not SOL on that great rate because your lender had the time to help you fit the mold that Fannie or Freddie wants to see for this loan. A good experienced lender will not give you a pre-qualification. They know it's a disservice to you and your family, and it puts them in a really tough spot too. So those are 9 mistakes I see buyers make regularly when they start shopping for a home when it comes to the mortgage side of it. My name is Mike Perna, local real estate agent. Please don't hesitate to reach out with any questions wherever you're at in the United States if I can be of any service whatsoever. Thank you again, and see you on the next video.